All right, guys. Good morning. Good morning. It is FOMC day. It is GDP day. It is ADP jobs data day. We got a lot of stuff coming out today. We got ADP jobs data coming out the earliest this morning at 8:15 Eastern Standard Time. It's expected at 77,000. Last time it came in at a negative 33,000, which was kind of a shock. It did negatively impact markets when that came out. Followed by GDP data at 8:30. Expected at 2.4% for quarter two. This is quarter two GDP, followed by the FOMC decision at 2 p.m. Eastern Standard Time today. So we got a lot of stuff going on. It's a big day. Yeah, probably the biggest day for economic data that we've had in a while. We also have, I believe, Microsoft and Meta earnings coming out this evening. So we just have a lot of stuff happening this weekend. Or not this weekend, this Wednesday, I should say. So, yeah, we'll see if we get anything good. We'll see if the market reacts favorably or not. And yeah, let me know what you guys think. You guys think today will be bullish or bearish? We're going to do some polls here. The first poll is going to be around... the first poll is going to be regarding ADP data first. So let's get that poll rolling here. Today's ADP jobs report show up higher or lower than the 77,000 expected. Vote on that poll. Let me know what you guys think. The Nasdaq's honestly pushing up a little bit. We broke high. It's not highs. I'm sorry. I don't think it's highs. Let me see. Hold on. Is it highs? No, highs are 23,650s. So we're at 23.5s right now. But the highs of the day are right around 511s, 512s. And we are edging closer to that this morning. We'll see if the market reacts favorably or not to this. Yeah, I mean, it's almost certain we're going to be pausing rates today. It's almost certain to be a rate pause. What's going to matter more than the rate decision is Jerome Powell's tone during the conference. A lot of stuff's down. Tesla's down. Apple's green. Nvidia's green. But Nasdaq slightly green too. Bro, I hate Windows 11, dude. I really do. I don't want that to pop up. Why does my ticker at the bottom say all these things are red? None of this stuff's red. Tesla's not red. The Q's not red. Everything's green. Why is my ticker wrong? Alright, hold on. Let me fix this. Save this and re-update it, so give me a second. File. S. Strange though, like, do I have to re-add this thing? I guess I do. Or delete it. Let me re-add the browser source for it. Local file. 1200. Pretty solid. The white background. That's not really bad. The white background. I think I need to make it a little bit longer. Oh, y'all can't even see what I'm doing in the background. It's okay. Make it 3,000. Gotta make a scroller too. Scroll to this. Slow scroll, but a scroll. Alright, well today we got a white one. Alright, white one works. We'll make this 40 equal thinner. Yeah. I like the black one too, but that's alright. Can't even see it. Okay, I gotta edit this again. I guess that's why they do 50. There we go. Let's move this up a little bit. All right, guys. So yeah, that's an updated one. I wanted it to be accurate. Bitcoin up 0.4% today. Is that right? Yeah, something like that. S&P up 0.18%. Nasdaq 100 up 0.24%. There we go. There's the tick. Okay, look at this 23.5 level bouncing right here. Nvidia's up too. ETH down 0.60%. All right, so this is a critical 3-day stretch, right? We have second quarter GDP, we got the Fed decision, we got Apple, Meta, Microsoft, Amazon earnings. Investors are kind of cautious, although we are green today. You can see Nvidia went down to 175.50 and then bounced right afterwards. Though some officials think we should cut today, tariff-related inflation worries persist. Treasury yields have dipped in recent auctions, but it's still pretty probable we are not going to cut rates today. If you take a look at this, oh my gosh, bro, Windows 11 bucks. It's still looking less than 2% probability, or slightly over 2% that we are going to cut rates today. Outside of that, we are almost certainly going to pause. If we take a look at September, it's looking like 66, 67% likelihood that we are going to be cutting either 25 here or 50 here. So when you add these two, it's about 67%, 66.5%. And so pretty probable that we're going to cut in September at this point in time, but this could always be subject to change. You know, this is always subject to change. It always could change. If we take a look at 10-year treasuries this morning, they are down to 4.3%. So they have decreased a little bit, especially yesterday. They went down a lot. And they're decreasing a lot this morning as well, showing a lower interest rate sentiment. But investors are kind of waiting for the Fed decision. But yeah, you can see we dipped all the way down. We're down a little bit this morning for 10-year treasury yields. We're at 4.3% roughly. Nasdaq still pretty sideways in range. The US and China did have talks in Sweden, which concluded with no agreement, extending uncertainty ahead of the August 1st and 12th deadlines. Although they did, pretty sure they extended this again, right? Another 90 days. Asian equities are mixed today. Taiwan and Australia rose modestly. Hong Kong fell 1.5%. Japan dipped slightly. And so investors are positioning ahead of central bank decisions. There's a big earthquake in Russia that happened. In pre-market this morning, we did have a lot of earnings come out. We did have a whole gang of earnings, an array of earnings that released early this morning. Procter & Gamble came out. Microsoft is reportedly in advanced talks to land a deal that could give it ongoing access to OpenAI. Treasury Secretary Bessent says China talks are breaking for lunch. Wait, that's late. Hold on, that's yesterday. Sorry. Garmin posted fiscal year revenue of 7.1 billion. They expected 685. Altria posted 144 versus 139. Revenue of 6.1 versus 5.2 expected. NBA 30-year mortgage rates did show up this morning at 6.83%, slightly under last week's 6.84. 6%. ADP data did. ADP dropped earnings today. They posted adjusted EPS of 226 versus 223 expected. Revenue of 5.13 versus 5.04 expected. Better than expected for both metrics. Adjusted EBITDA 1.2 billion versus 1.18 billion expected. Nothing else super big with earnings. Like we had a couple other small earnings get released today. But the big ones drop after the closing bell. We had like Etsy come out, missed EPS, beat revenue. Altria, Humana, Kraft Heinz, Dinner Rack, and more. Tiva, ADP, GE, Wingstop. If you take a look, this is earningswhispers.com. Earningswhispers.com is what this is. But you can take a look at like kind of what stuff did. Here's their actual reported revenue, and then here's their reported earnings this morning. And you can see VRT BDPS beat revenue, Etsy missed EPS beat revenue, Altria BDPS beat revenue, Humana missed EPS beat revenue, and then the rest BDPS beat revenue. Hershey's, HSBC, GE, ADP, Tiva, America Electric, Fiverr, Steve Madden missed EPS, missed revenue. Bro, I hadn't seen a Steve Madden store in years. Seen the shoes though. So yeah, it's a big day. Big day. We got ADP data coming out in like 50 minutes. Hey, thank you, Faye. Yeah, I'm gonna be drinking coffee. Do you guys like the light colored ticker at the bottom or the dark colored one? Here's the timer. Yeah, there's the timer right there on the left side. I got you guys. Yeah, the dark's better. I gotta update it. It takes a little while to update, but that's fine. Let me see if I can just change they're using JavaScript for this, and they're using it like a couple different arrays. Oh yeah, I could just change this. See if I can just change it. Okay. Let's see if it updates y'all's end. So I saved it. Let me do save as. Ticker. Yes. The problem is I gotta remove it every time. There we go. Just gotta add a scroller to it. And then we're good. Alright, there you go. Yeah, I think the dark's a little bit better. I'll just leave it like that. Alright, so we're still very stagnant in the NASDAQ. Nvidia went right down to 175.50s and then bounced exactly at that previous closing price. Apple's up a little bit. Again, we do have Meta over 707s right now, or at 707s. Microsoft earnings later on this afternoon at 514s roughly right now. Tesla at 320 still. A lot of these have been pretty stagnant. I think we got just too much stuff going on. Starbucks is up 4 to 4.5% despite weaker earnings. So if you take a look at Starbucks here, they had earnings last night. They dropped. They went up to almost $100 a share. I remember looking at this at $60 and being like, "That's a good buy." Should have bought more, but that's all right. Visa beat earnings but slipped down 2% after revenue outlook disappointed people. Humana went up 5% after solid quarter two. SoFi fell 7 to 8% after announcing an offering. Dilution is what it is. Corvo, Linden Club all went up on pretty big performance. Seagate dropped 6%. So GDP is expected to show, I'm showing 2.3%. What are you guys showing for GDP expectations? I'm showing 2.3%. GDP expected to show 2.3%. Labor market signals are kind of mixed. Claims softened moderately. Consumer sentiment showed modest improvement. So yeah, we had a 98% chance that we're going to pause rates. It's very improbable that we're going to cut rates. Very, very improbable. We're going to cut. Almost certain that we're going to pause rates. Yeah, 98% plus likelihood that we're going to pause. We also have pending home sales. We got the FOMC decision. Tomorrow we got jobless claims of PCE inflation. Friday we got non-farm payrolls, unemployment data, ISM manufacturing data, construction spending, Michigan consumer sentiment data. So a lot of stuff. Again, do me a favor, hit the like button, hit the subscribe button, help us grow the channel. We got 60% of voting on ADP employment coming in higher than the 77,000 expected. Last time it was negative 33,000 for non-farm employment data. Look at the NASDAQ surge here. Look at the NASDAQ surge. We're at 513s. Nvidia at 176.60s. Yeah, September's showing 66.5% likelihood of a cut. But we'll see. Yeah, so Atlanta Fed's GDP model now estimates GDP at 2.9% for quarter two, up from 2.4% last week due to strong net exports and slower rise in inventories. Although I don't necessarily, sometimes Atlanta Fed just has wild numbers. Briefing.com and Reuters has 2.5% expected. Trading Economics has 2.4%. Barron's has 1.8 to 2%. If the actual report shows 2.9%, that'll be a beat. Look at the NASDAQ surge here. Let's take a look at markets, see what's going on. Morgan Stanley raises price target to $200 from $170 on Nvidia. Probably what's driving this. Look at Tesla spike as well. Morgan Stanley analyst Joseph Moore raised Nvidia's price target from 170 to 200, keeping an overweight rating. He cited strong demand for Blackwell chips outpacing supply, although supply constraints remain. Improvement is expected in the second half of this year, likely boosting earnings. Nvidia remains their top semiconductor pick. It's Ethereum's birthday today, so cheers to Ethereum. I'm 10 years old. An NBA 30-year mortgage rate showed up at 6.83%. versus 6.84 last time. Surge up in Tesla and the Nasdaq. If there's any news on Tesla to justify this pop, I don't really see anything, to be honest. Could be Microsoft. Meta. 0.7%. Hey, we'll see, bro. Yeah, gold, if we take a look at gold, we got Meta Microsoft earnings today. Gold up to 33.84, so slightly green today, but not much. Again, this is probably an upgrade in Nvidia driving this price higher in the Nasdaq right now. Nvidia upgraded. Remember, we got ADP jobs data coming out. Not that long. Nvidia still popping up, dragging markets up again. Nvidia was upgraded by JP Morgan this morning. That is probably what has propelled the Nasdaq, S&P, SPY, Nvidia up over the last 10 minutes or so. It's an upgrade by JP Morgan for Nvidia. Yeah, we'll see what the see what happens. The last jobs report for ADP data was negative 33,000, much lower than expected. Yes, negative. It came in at a negative number versus a positive expectation for the last ADP number, and it did negatively impact markets. Yeah, we came in negative number versus a positive expectation, and we dumped markets down on it. Payrolls were actually a little bit stronger than expected the following Friday, but still. Jim Cramer says Microsoft is powerful. It can move AMD, Marvel, AVGO, and Nvidia today. Somebody quoted about ETH. They said, ETH is a trans-global fraternity of multivariant stakeholders ignited by a rich array of cultural imaginaries, themselves ultimately bound together by the ineliminable core of cyberpunk values. What a funny statement. I'll tell you one thing. Programmers love to use the word array. Like an array of this. You hear me use it sometimes too, right? Programmers love using the word array. Why? Because there's a lot of arrays in programming, you know? If you can find a way to use it outside of it, I think a lot of people do. Here, market Powell. Yeah, we'll see what happens. All right, guys. So Nasdaq just broke highs. Is this highs of the day? I think it is. Yeah, this Nasdaq just broke highs of the day again, up to 516s now. Not a huge range on this high of the day break, but we're still breaking highs of the day. You know, I think the market's a little underwhelmed by that, though. Usually, you know, I think the market's kind of used to breaking all-time highs recently. So highs of the day, while it's a big milestone level in and of itself, it's not the big mover that a lot of people want it to be. But SPY's heading up. Nvidia's been pretty strong, although Nvidia all-time high is now basically 180. It's 179.60s for all-time highs on Nvidia now, so it's not quite there. You know, it's still got a long ways to go, but yeah, still breaking highs still. We're not going to cut rates today, though, guys. Look at the NASDAQ continue to push over highs of the day. We're at 518s now for highs, or, yeah, 518s. We're not cutting rates today, though, guys. Like, you don't want to fall for the trap. Okay. You got a lot of people in different markets that want, like, okay. You got a lot of people that do FOMC streams, as an example, right? And they want you to tune into their stream. And so they're going to be like, rate cuts. They might tell you something wild just to get you to tune in that they know is not going to happen, you know? And a lot of the time, some of them don't even understand what they're talking about anyway. You know, they're just kind of covering it just to cover it. But they don't really understand. They don't really watch Fed meetings. They're just kind of covering it because everybody else does. And so you just don't want to fall for that trap. All right, NASDAQ pumping up, though. We're at almost 520s. Some of them genuinely know what they're talking about, but a lot of them don't. If they're telling you we're going to get a rate cut today, trust me, they have no idea what they're talking about. Unfortunately. Maybe I'll eat my words, though. Honestly, if we do eat my words, I will laugh at it, because I've streamed so many FOMC meetings, so many FOMC decisions, and I don't think I've ever been wrong about a decision ever. You know why? Because I just look at the CME watch tool. Those are big banks. Those are the average of big banks. Big banks know way more than I do. They got way more information than I do, way more inside information than I do. They're almost never wrong, and I'm not going to bet against them. And so if something's 99 to 1, I'm going to bet on that 99. You better believe everybody that has a brain should, despite what they want. I think people get a lot of confirmation bias in this stuff. Like, if you want rate cuts, you're like, yeah, we're going to cut rates today. No, we're not. I don't care how much you want a rate cut. You got to throw the confirmation bias away and look at what's actually going to happen, which is going to be a pause. I think we're going to have a dovish pause today, is what I think. Right? I think we're going to have a dovish pause or a data-dependent pause. I think we're going to pause, and then Powell is going to be dovish, loose, less restrictive, optimistic about rate cuts, or we could go the other end, but that's just a guess. I don't know. There's always a chance. A cut would make inflation worse, not better, in theory. Now, it's not going to make, like, the things that really make inflation worse are supply chain problems, QE, money printing. That's really what makes inflation get bad. And so, again, I'd be okay with a cut today, but continuing quantitative tightening. Or a pause today and end quantitative tightening. That would be an optimistic, balanced, dovish, thing. I'm okay with that, too. Yeah, I don't know how he would justify a rate cut anyway. I mean, I think you could justify it. I think you could say, hey, quarter one was negative. We don't have the finalized quarter. If I was trying to justify a rate cut, this is what I would say. I would say quarter one was negative 0.5% for GDP for quarter one of this year. We don't have the finalized quarter two numbers yet. Even if we did the prelim numbers or the advanced estimate numbers today, we don't have the finalized numbers for quarter two, so we don't know what that's going to look like. Some of the ADP job numbers have been weak, although some have been strong, and inflation has shown stability. So let's cut 25 basis points. If I was arguing a cut, that's what I would say. So we're going to start it off small, cut 25 today. That's what I would say. And here's the thing, right? Like, I hear a lot of people, I'm not against you here at all. If you think we should cut today, I'm not against you, okay? I'm not for you either. I think it's somewhere in the middle. It's a little ambiguous. I would be okay with a 25 basis point cut, to be honest, but it's somewhere in the middle right now. I don't think it's super easy to argue at this point in time. People like to bring up, oh, well, Powell cut for the other president last year. Powell cut when the other president had office in the other president's administration. And again, with love here, with love. But if you genuinely believe that, you have no idea what you're talking about. You know why? Because rate cuts, there's a lagging effect to them. They're not going to immediately they're not going to immediately bring down interest rates across the country, right? Like, not for the interest rates that you're worried about. And so if Powell cut in December of last year, he knew who was about to be president. He knew the new administration was coming in within a month, right? So really, the cuts he did last year benefited this administration, not the last one. You know, again, people like to get political, and I get it. I'm not political at all. I'm very neutral politically. I don't care about any of this stuff. I think you could argue a 25 basis point cut, but I don't think it's obvious. But the cuts he did last year benefit the current administration, not the last one. You know, there's too much lag with rate cuts. People just get mad, I think, you know, and it's all love. Like, cheers to you guys. Like, I'm here with you. I'm not against you, but don't make everything political. It doesn't need to be. If I think we could argue a rate cut, don't get mad at me. If I think it's ambiguous and it's not super obvious, don't get mad at me, you know. All right, guys, Nvidia up to almost 177s, Tesla at 322, SPY at 636. All this stuff is green today. We're seeing some optimism. We do have non-farm employment data coming out in about 42 minutes, 32 minutes. Sorry, my math's wrong. 32 minutes. I forgot I was at 8:15. Yeah, it's all love, guys. It really is. Like, I'm not trying to prove anybody wrong. I'm just telling you. Like, Powell cutting rates a full percentage point last year benefited the current administration. That's who it benefited. You know, there's a lag. Doesn't immediately bring interest rates down like you want them to. Like, there's a lag between rate cuts and the impacts to most people. Like, the federal funds rate, what it directly impacts is home equity lines of credit. It impacts home equity lines of credit, adjustable rate loans, because those are the rates that are getting adjusted to a certain extent. But there's a lag, you know. How can you compare the both administrations? I'm not comparing either of those administrations. In what way am I comparing either one of those people? You know what I mean? Like, I'm not comparing any of that stuff. I don't care about any of that stuff. Like, whether you think the last one was good or the current one is good, I don't care about any of that stuff. I'm looking at rate decisions and who they benefit. And it's all good. If you disagree, I'm not against you. I'm not. All right, NASDAQ turning down here. I'm trying to see what stock it is. It looks like Tesla has pulled all the way back to 322. Hey, what's up, Rusty? AMD is heading up too. Bitcoin slightly green as well on the day. AMD at 177. Look at this bounce right here, this 505. One thing I've noticed is I have to put faith in my levels here. I gotta have faith in my levels. I guess it would be nice. We're up to 511s here. 511s. My brother says 90% he cuts rates today. Nah, it definitely ain't 90%. I mean, you never know. Listen, the president and Powell did meet. They seemed like an old married couple. They seemed like they did not like each other at all. But they did meet last week, and maybe they made some decisions last week that we don't know about. It's possible. All right, guys, look at the NASDAQ pump up here. Trying to see what's driving this. Look at this big rebound. Right at my level too, this 505 level here. The SPY rip up, so this is something else. Yeah, I mean, again, we got less than a 2% chance of a cut today, I think. Something like that. Nvidia is pushing higher though, look at this. But yeah, I mean, I've said this once, I'll say it again. When we look at like the CME watch tool, that's bank estimates, expectations. You don't bet against the big banks. They know way more stuff than we do. You know? And again, since the decision is so obvious today, which is going to be a pause, everything's going to pivot to what Powell says during the actual press conference. Like, is Powell hawkish? Is Powell dovish? I believe Powell's going to be dovish personally, but you never really know. You never really know. Like, I don't think Powell's going to pander to the president by cutting, but he might pander to the president by being dovish. Like a dovish pulse is what I think is going to happen today. That's what I think. But again, I might be wrong. I don't think today's the dot plot FOMC. I think the dot plot FOMC was last time. So, yeah. So we're not going to see an updated dot plot today. It doesn't happen that often. This is quarterly meetings. So March, June, September, December. So it's every other meeting. These meetings happen every 6 weeks, right? And so when's quarterly? 12 weeks. So it's every other meeting. Yeah, if we get a cut, listen, I will eat my words and make fun of myself. I'll be the most self-deprecating FOMC streamer in the world if we cut rates today. I won't even be mad. I'll just kind of laugh because it was wildly outside of expectations. But I know he's probably going to have like a purple tie, like a mauve tie, purple, lavender, dark or light purple. I don't know which one. I know it's probably going to be purple. 50 basis point cut. I just feel it. October will be a big cut. Yeah, I mean, I don't think so. But who knows? September, we got about a 66% chance of a cut. Yeah. Hey. ADP jobs data coming out live. Yeah, I'm asking you a question, Pawn. In Discord. I haven't opened it up yet. I've opened it up now. Yeah, so UBS says saving from Credit Suisse deal reached 9.1 billion. Visa says spending is growing at a healthy rate. Comcast could see its heaviest internet subscriber losses ever. Good. I hate Comcast Xfinity, and I am so glad to see them doing worse. They deserve it. Worst company ever. Worst company ever. The news, we had some news here. Okay. I don't have Comcast anymore. I got rid of them. Here's the problem. Comcast hires customer service representatives that have no idea what they're talking about. No idea what they're talking about. I literally had a lady one time with Comcast say that my internet wasn't working correct. Like, my internet speed was slower because because my password had too many capital letters in it. And I'm not the most tech savvy guy in the world,
But I had to shame her a little bit for that comment. Like, she's just throwing things out there, seeing if I'll accept it. And honestly, they just lied to you. They just lied to you. They're like, yeah, $150 out the door, net, $150 a month. And then you get your bill and it's like $300, and you call them and you're like, hey, what happened? $150 net out the door. What happened? And they're like, we never said that. And I'm like, hey, I know you guys record the calls. Just go listen to it. Somebody told me that last week. Locked me into this contract. Oh, no, we never said that. They just want you to stay on. They'll tell you whatever they can, you know, even if it's not true. Boo, Comcast. Yeah, they're terrible. Comcast, horrible. It's not good. Not good, a company. People that work there, some of them might be good. The reps, they don't know what they're doing. And they just lied to you. I know how to get out of the contract for Comcast, though. I will know how to do that. I'm from Baton Rouge, and I know Baton Rouge doesn't have Comcast. They have Cox Cable, is what they have. And if you're moving to a place that doesn't have Comcast, they'll let you cancel your contract. So I was just like, hey, I'm moving to Baton Rouge, guys. And yeah, that's all it took. Any idea when it's going to be risk on assets time? What, you mean like stocks? I would argue we've been on risk assets time for the last month and a half, 2 months, as we've been breaking all-time highs. Bond yields are elevated. The risk off assets are paying some good yields. But SPY, NASDAQ have been breaking all-time highs. Nvidia's been breaking all-time highs. Mag 7 stocks have been breaking all-time highs. I mean, I don't know. When do you guys think? I'm not really interested in buying at these elevated levels. See, look at this dip down here again. I should buy this. Look at that hold right here, man. Support level hold. Yeah, I mean, I'm from Baton Rouge, Louisiana. Lafayette's got some great food, though. Shout out to Lafayette. You know, sad to see Dustin Poirier retire. But, all right. Not this time. Tariff period is up. We'll pump this time. Best August ever. Maybe. We're heading into September with the September slump potential. See what happens there. But yeah, we're heading into it. Do y'all think we get a hawkish pause today or a dovish pause? I'd say to think dovish. I think, again, I don't think he's going to pander through rate cuts today, but I think he might pander with tone. And so I think we might get a dovish pause today. What I think. Maybe we end QT. That'd be good too. You know. And then if we end QT today and then cut in September, that's pretty dovish. I might be wrong, not an investment professional, guys. Listen, I'm not liable if you lose. I might have no idea what I'm talking about. Might be wildly wrong about anything I say. Don't copy me. Sometimes I trade and lose off stream. You might not see it. Understand CFTC 4.41. And remember, I might have no idea what I'm talking about. Don't copy me. Some links are affiliate or sponsored links. All that good stuff. Dovish. Pull back. Be a pause. That's all I care about. Easier to plot out September. Yeah, I mean, we're gonna pause today. All right, guys, we got 20 minutes until ADP data. 20 minutes. been a slow time for economic reports at 8:30. Like, we haven't really had any big ones, but the next 3 days are freaking crazy in terms of economic reports. Like, we have so many economic reports over the next 3 days. Kind of wild. We have ADP data today in 20 minutes, followed by GDP data in 35 minutes. We have we have data at 10 a.m. today too. Yeah, we got pending home sales data at 10. We got the FOMC decision at 2 p.m. We've got jobless claims at 8:30. Tomorrow we've got PCE inflation data, core PCE, which is the Fed's preferred inflation metric. Like, PCE is what the Fed looks at to gauge inflation. It's what the Fed looks at to gauge it. And so we have that tomorrow, Thursday, 8:30 Eastern Standard Time, a big report. Followed by Friday, which we just have a whole bunch of stuff going on. We got non-farm payrolls, unemployment report, ISM manufacturing, Michigan consumer spending, Michigan consumer sentiment, construction spending, EMI data, and more. And then next week's kind of slow. We got factory orders, trade deficit, services, jobless claims. A little slower next week. Although, do we have any earnings next week? Let me see. I know we got Microsoft Meta today. We got Berkshire Hathaway Monday, Wayfair Monday, Palantir. Okay, so Monday Palantir earnings, pretty big. Hims, Spurs as well Monday. Tuesday Pfizer, Caterpillar, BP, AMD, Supermicro Semiconductors, and Snapchat on Tuesday evening. Wednesday, oh, we already had Shop. What's that? I always get Shopify and Spotify mixed up. We had Spotify. Shopify is next Wednesday. Then we got like IONQ, a bunch of quantum stocks too. Great Desk, Soundhound. Yeah, so we got some earnings next week, specifically Monday and Tuesday. I hope he ends QT today. He's already reduced it by 80% for treasuries. He's still doing MBS QT at the same rate he was though. So yeah, if you want mortgage rates to go down, ending QT would be an optimistic thing, and I think we should do it. Although ending QT might make home prices increase if it does reduce mortgage rates. Yeah. All right, guys, we got 15 minutes. I'll try to buy this dip here at 505s. We'll see, though. Honestly, I've been playing with my Algo a lot more. Seems to work the best on a 1-minute chart, but look. Tell me what you guys think of this thing. Honestly, I think it's very solid. If you look at, like, have it drawn where it puts a line up where the algo shows up, and the follow through is pretty decent here. Like, it calls tops and bottoms incredibly well. Hey, look at this. Hey, look. Let me Now, it's not perfect. It's not going to work every single time. Nothing does. But this one we got a little follow through, not much, but it's a 1-minute chart, so like it's meant for scalping. We got a little bit. This one literally called the top right here. Nice little breakdown. This one literally called the bottom right here. Nice little rip up. This one didn't work, so that's 1. This one kind of flat, but I can say this one didn't work, so that's 2. This one worked. This one definitely worked, and then this one definitely worked. So 2 of them didn't work out of 1, 2, 3, 4, 5, 6, 7, 8. 2 out of 8. That's 75%. Not bad. And if you scroll back and if you keep looking back, it actually works better. Hey, look. This one definitely worked. This one worked. This one worked. So that's like 2 out of 11. So that's greater than 80%. This one worked. 2 out of 12. This one worked. 2 out of 13. This one didn't work. 3 out of 13. But you can kind of see it's pretty accurate. Pretty accurate. I'm going to continue building it, but yeah. Robinhood. All right, guys, we got less than 15 minutes here. And I'm still going back here and looking at this. It's pretty solid. Like, look. To give you another glimpse at it here. Look at this. It does really well at calling the tops to some of these here. Look, top. Boom. Literal bottom. Boom. Top. Here is where this one showed up and we broke down well underneath it. Here. Broke down. Boom. Every one of these worked. 1, 2, 3, 4, 5. Time of the day might matter too. But I'm going to keep building it. And I don't know what I'm going to do with it. NASDAQ just turned red, though. Not necessarily red on the day, but we turned down a lot. Buy turned. Nvidia turned. Tesla still dropping a little bit at 321s. Yeah, we got 8:15 Eastern Standard Time is when ADP jobs data shows up. In 12 minutes. You can do me a favor, hit the like button, hit the subscribe button. We do this live for free every day. I know some of you guys tune in and you don't subscribe. Try it once, it might feel good. Do it now. Nice. NASDAQ turning down a little bit. It's mostly Nvidia driven though. Nvidia got up to almost 177 and then turned all the way back to the other side here. Alright, so we're rebounding a little bit here, but I think it's very plausible today, guys, that because of all the sheer amount of catalysts that we have going on today, that the market is choppy. It doesn't mean we're going to be, but I think it makes plausible sense that the market's flat and choppy today. I just don't think we're gonna have super easy momentum today. Yeah, I just don't think we're gonna have super clear momentum. I think it's gonna be more difficult to capitalize on stuff today. We'll see. All right, we're rebounding a little bit. We're testing the 200 exponential. All right, so we're dipping down a little bit here. Looking up some other news, trying to get you guys some good news today. We're bouncing back up. We're at 23.5s. Other news we have going on. All right, the ADP data drops in about 7 minutes, 7.5 minutes. Again, it's expected at 77,000, but I don't know how accurate this data is relative to the expectations. Last time it was expected at like 30 or something like that. It came in at negative 30. Bitcoin dominance starts to climb. Okay, so we got a fake Jerome Powell in chat. Love to see it. All right, so we're still dipping down here. We're under 23.5s. I might short it if we get a little bounce. But again, I think we also could have choppiness. I think you could also maybe potentially bet on choppiness. So I might buy a quick little dip here. See if we retrace back up. I'm gonna take 10. Trying to work on using limit orders a lot more. All right, guys. There we go. Right, we took a third of that off. All right, took over half. Nice. We have 2 left. We can probably hold this break even now. Gonna cut it right there. Still green. Not the bounce exactly where we wanted. Will it make a market move a lot? I don't know. Is the mic a little bit low? I can turn the volume up. How's the mic, chat? I set a suppressor on it so it doesn't have all those pop sounds. All right, look at this drop going on in markets right now. Hold on, let me see what's going on. Whoa. They're dropping significantly here. Let's see if there's any breaking news that happens right before ADP data shows up. So Macron told French cabinet that he expects further talks to come over EU's framework tariff trade deal with the US. He said the deal with the US is unbalanced but has some good aspects according to a spokesperson. Look at the NASDAQ fall quickly here. Why are we dropping? U.S. president says India will be paying a tariff of 25% plus a penalty from August 1st. That's the news that's influencing markets right now. We got less than 5 minutes before ADP data comes out. I'll put the news up in chat. This is the news. The president says India will be paying a tariff of 25% plus penalty from August 1st. Basically, no deal done with India. That's essentially what's going on. Interesting. All right, guys, we have about 3 minutes left. 3 minutes left. And this Indian news is dumping markets down. Got about 3 minutes left. We'll see if the negativity continues here. But yeah, we are dropping pretty quick. So we're starting to move up. Coinbase beginning this fall, users will be able to use Chase credit card to make purchases on Coinbase. All right, guys, we got 2.5 minutes left before ADP data. Again, ADP data expected at 77,000 for ADP employment data. And then remember, in about 17 minutes, we have GDP data for Q2. Apple's falling down. I think Apple's driving some of this move down, but Tesla's down, Nvidia's down, SPY's down after the president said that India is going to be paying tariffs starting August 1st. The market's not crashing at all. This news, the news that the president says India is going to be paying a tariff of 25% plus penalty beginning August 1st, which is Friday, is negatively impacting markets originally, but it doesn't mean we're going to stay down here. And again, we are very close to this data showing up. Very close. Again, 2 minutes, 77,000 is what's expected for ADP data. We got about a minute and a half left, chat. Again, hit the subscribe button, hit the notification bell. We are starting to rebound back up some on this. All right, here we go. Less than 1 minute here, chat. Hit the live button next to the play button. Make sure you're fully subscribed to the stream. We appreciate it. But ADP jobs data coming out soon, followed by GDP data. So once ADP data comes out, it's not time to leave the stream because GDP data goes out in 15 minutes. So be ready. Q2 GDP data goes live at 8:30 Eastern Standard Time. We have about 30 seconds. Make sure you hit the live button next to the play button. This timer's a little bit off. Make sure you hit the live button next to the play button. Make sure you're fully caught up on the stream. We appreciate it. We have about 20 seconds left. About 20 seconds left now. Yeah, it's a massive day. We just got a lot of stuff going on. ADP data drops in about 10 minutes. 10 seconds, though. Let's see what happens. All right, guys, here we go. Again, hit the live button. You can put it in 2x speed to make sure you're not delayed on the stream. Let's see what we get here. Here we go. And the report drops right now. 104,000, 104K versus 77K. Stronger labor report than expected for ADP non-farm employment change data. 104,000 versus 77,000 expected. ADP non-farm employment showed 104,000. Again, 104K versus 77K expected. And we'll see what happens here. NASDAQ originally reacted positively here. Originally reacted positively here. I'll put this data up on screen, but stronger than expected at 104 versus 77 for the U.S. ADP national employment numbers for July. Again, I'll put this number up. Don't go anywhere because we got GDP data dropping. We got GDP data dropping live. Previous was negative 33K, 75,000 expected here. Again, don't go anywhere. GDP data goes live 8:30 Eastern Standard Time, so just be ready. Let me switch the stream over. But yeah, better than expected. The market might be waiting here for the market might be waiting for GDP data for Q2. Again, GDP data goes live at 8:30 a.m. Eastern Standard Time. You can see the data on the bottom of the screen. GDP live at 8:30. It's expected at 2.4% today. 2.4%. So let's see what we get. Yeah, live 8:30 Eastern Standard. And then we got the Fomc meeting. Still waiting to see if we get a positive reaction to this. We haven't really moved. We did show up slightly stronger than expected, but again, we'll have to wait and see what we get. They're starting to tick down a little bit under this 44 level. I might actually short this. Or again, quarter 2 GDP data. The last one was negative 0.5%. This one is expected at 2.4% positive here. Again, we'll put the timer up for this one as well. We only have about 12 minutes left, 11 and a half minutes left, really. So we don't have that much time until GDP comes out. I'll put this data up right here. 11 minutes, 20 seconds or so. Yeah, I mean, I don't think we're going to cut rates today. I mean, I don't think we're going to cut rates. Even if this data came in really weak, we're not going to cut rates today. I don't think. Not really. I don't think it's going to influence it. But Alto confirms it has agreed to acquire CyberArk. $45 per share cash. Yeah, that's probably pretty accurate, buddy. Bitcoin and gold, universal assets, kind of, yeah. Probably pretty accurate. What do you guys think of the best universal assets? I don't know, man. I think they vary. Alright, so I might short this. Trying to think about what I want to do. I don't know if I want to short it. Starting to rebound back up. All right, guys, we got 10 minutes before GDP data goes live. 10 minutes. Remember, quarter 2 GDP goes live 8:30 Eastern Standard Time today. Would you risk everything into an S&P 500 short today? No. No, I would not. Yeah, so private employers added 104,000 jobs in July. Hiring gains were led by services, the exception of education and health, which posted a net loss of jobs so far this year. Our hiring and pay data are broadly indicative of a healthy economy. Employers have grown more optimistic that consumers, the backbone of the economy, will remain resilient. You can see the ADP U.S. private payroll changes. 1 to 19 employees grew, 20 to 49 employees decreased, mid-sized companies improved, larger mid-sized decreased, large companies grew. National resources and mining up 9K, construction up 15K, up manufacturing up 7K, trade and transportation and utilities up 18K, information up 9K, financial attractiveness or financial activities up 28K, professional and business services up 9, education and health down almost 40,000, leisure and hospitality up 46K, and other services up 2,000. So that is the ADP non-farm employment change report. Didn't really move or rock markets. But again, we got GDP data coming out in about 9 minutes here, chat, so just be ready. Yeah, I mean, I'm not going to risk everything into a long right now or into a short at all-time highs. I'm not going to short all-time highs. I'm good. I'm good on that. That seems dumb, risky. Might work. Wouldn't be the first dumb trade that worked. I'm looking at you, GameStop. No, I'm just kind of sarcastic, kind of serious. Yeah, so GDP expected at 2.4 to 2.5% today. 0.4 to 2.5%. Yeah, I don't think we're cutting rates today. I just don't think we're doing it. Negative 0.5%. It was negative 0.5%, not negative 5%. Negative 5% would mean we're in a lot of trouble. Negative 0.5%, not good, but it's not negative 5%. There's a difference. That one decimal point makes a pretty big difference. I would argue. All right, guys. Hey, we have 7 minutes. 7 minutes. Yeah, hit the subscribe button. Hit the notification bell. We appreciate the love. Thanks so much. GDP data. Well, this jobs report is just a prelim report. I mean, this one doesn't really matter much, I would say. The big one is going to be... The big one's going to be Friday, the non-farm payroll report. Friday's report's bigger. We got this 46 level. I am thinking short, but I don't think it's a good idea necessarily to wait this long either. So, how did I get? All right, guys, we are trending down here. We're at 23,480 here, 23,480. Curious on the GDP, though. Very interesting. Yeah, for quarter two, I mean, everybody basically everybody expects pretty positive GDP for quarter two because of the deals. Originally, the negative quarter one GDP data was so negative because of the tariff threat. A lot of that's calmed down. Some of it hasn't, but a lot of it's calmed down. And so that's why quarter two is much stronger than quarter one. Amazon is going to pay New York Times at least $20 million a year in an AI deal, according to Wall Street Journal. So again, Amazon getting a deal done with NYT, New York Times. If we take a look at Amazon here, do you guys think we react positively or negatively to GDP? Actually, I'm going to do a poll. We have 5 minutes, so hurry up and vote. All right, so high or lower as expected is going to be the option here. There's the poll going live right now. Let's see if this 486 level turns into resistance here. Yeah, we're not going to cut rates. What's up, Tobias? Share a link to the employment report. There you go. All right, so we're rebounding back up some here. Again, we're very flat, choppy after breaking down. Again, the market did break down after the president basically said India is going to be paying a tariff of 25% plus penalty starting August 1st, which is Friday. We have less than 4 minutes left here for this report for GDP quarter two GDP data. Get quarter two GDP. Negative would be lower GDP. Most likely. You never know. There's always a degree of variance that comes with this stuff because you just never know. Market can react favorably to this. Could react negatively to this. You never know. sometimes the market wants rate cuts, and so higher GDP is worse. And we have some instances of markets in the last 5 years that have behaved that way. But in general, and again, this is generalized, weaker GDP is bad. Higher GDP is good, generally. Nuh-uh, bro. What about this one time 3 years ago? No, generally, that's what happens. Not always. There's variance. All right, guys, less than 3 minutes. We got almost 2,000 people here, so I appreciate you guys watching the stream. Just make sure you watch the FOMC stream with us later. We got the FOMC decision later. Huge day. Should be fun. Yeah, that's gonna be live 8:30 Eastern Standard. Or that's gonna be live. I don't know when we're gonna go live for that. Probably pretty early. Do me a favor, hit that subscribe button. I appreciate it. Thanks so much. Hmm. 2 minutes left, chat. Looking at our poll numbers, we did a poll pretty quickly here. 50-50 split, or we got 50% think higher GDP, 30% think lower, 20% think as expected. Less than 2 minutes. I appreciate it. Yeah, people asking all these questions. Nobody's gonna answer them until GDP comes out. We're too hyped up for GDP in here right now. So nobody's gonna respond to those questions. It's like I'm gonna cover GDP in a minute and a half, and then maybe we'll get to some of those questions. Hope you understand. Hey John, why didn't we have a recession? Because we didn't have 2 negative GDP prints. You know, consecutively. All right, guys, about a minute left. All right, guys, 1 minute. Less than a minute. Hey, thank you, Alan. Yeah, it's a huge day today. A lot of stuff going on. Forty seconds. 40 seconds. Again, hit the live button. Put it in 2x speed if you need to. I'm going to pause this. We got about 30 seconds left. Hit the live button next to the play button. What will GDP show up as, guys? We're about to find out. Expected at 2.4 to 2.5%. 20 seconds. See, we get about 10 seconds left, guys. Hit the live button. You can put it in 2x speed as well. All right, here we go. Here's the data release right now. Okay, there's the data. We came in at 3% GDP. 3%. 3% versus 2.4, 2.5%. 3% GDP for quarter 2 versus a 2.5%. Last time was negative 0.5%. Again, 3% GDP. Again, 3% versus 2.5% expected. Previously was negative 0.5%. Very strong GDP data, 3%. So honestly, Atlanta Fed actually got it right a little bit here. But honestly, we're coming down some on this report. Again, could be the core PCE prices advance estimate comes in at 2.5%, but GDP deflator 2%. Again, GDP showed up at 3% versus 2.5% expected. Pretty strong, honestly. Weird though, we're kind of reacting negatively on this report. That's why I say nobody freaking knows how we're gonna move here. But we showed up at 3% versus 2.5% expected. 3% versus 2.5% expected. Now this is the advanced estimate, so we still need 2 finalized versions of it, updated versions of it. But this is generally, honestly, pretty solid. I mean, it's not bad. I mean, you know, it's an argument against rate cuts, though. And so the market might respond in a lot of different ways. But again, GDP showed 3% versus 2.5% expected. I'll put this data up on screen now. Again, 3% versus 2.5% expected. There you go. Markets are kind of reacting negatively here. Kind of reacting negatively. See if we continue to move here. But still choppy ahead of FOMC. Yeah. Yeah. Again. FOMC meeting today live, 8:30 Eastern Standard Time. We'll see what that shows us here. But FOMC meeting live, 8:30, or I'm sorry, 2 p.m. Eastern Standard Time. So stick around. We do have yeah, so we got the Fed rate decision at 2 p.m. today. NASDAQ's kind of mixed, to be honest. Hasn't really moved things. Yeah. We are coming down a little bit now. Also, guys, if you want to watch our full Jerome Powell FOMC stream, I'll put this up. But NASDAQ kind of choppy right now. Let's see what the poll asked. The poll asked, honestly, Atlanta Fed GDP got one right. It was a W for Atlanta Fed GDP. Usually they're wildly wrong. They got one right. Yeah, I mean, I think the market's waiting on the FOMC. I agree. Yeah, I think you guys are probably right. Market's just waiting on the FOMC decision, which is today. Again, so if you want to watch that FOMC stream, make sure you go to this link right here. Got this event schedule here. Here's the stream. If you want to join the wait list for the stream, there you go, right there. Also, guys, give me a follow at Beginner Trades. Listen, I need less than 20 followers on X.com at Beginner Trades. Less than 20 followers to break 4,000 followers on X. Do it now. Give me a follow. We cover all the breaking news live. We report it live there as well. If you can't tune into the stream and you got like a second to look, you find it there. Also, check out Top Step. They're a sponsor of mine. They pay me money. I am biased in their favor because I get paid by them. I run this stream for free. I have no paywalls behind any of my content. And so you better believe we're going to make money somehow doing this because I'm not doing this out the kindness of my heart. But if you want to check out Top Step, if you want to learn to day trade, do not fund your own account tens of thousands of dollars. You're probably going to lose it. Most day traders lose regardless of where they go. You get around the PDT rule in futures. Top Step allows you to get started for $50 a month. If you pass the test, you get a $50K funded account, 90% split. You get to keep your first $10K prior to that split kicking in. And they pay out millions of dollars. They're incredibly reliable with payouts. They're just the best option, in my opinion. No PDT rule in the futures market. You can day trade the S&P, NASDAQ, Dow, Russell, gold, a lot of other stuff. You can also get zero commission on Top Step X. Just really, really useful. If you want to check it out, I'll put the link up. Again, I get paid by them. I'm biased. Some would say I'm the top 3 most biased person ever. If you want to check it out, here's the link. I appreciate the love. There's the link right there. I'll pin it to the top of the chat. Thanks so much. And yeah. It's just at Beginner Trades. Beginnertrades. Honestly, my x.com page has been growing a lot, dude. I appreciate you guys. We're gonna keep growing, but yeah, man, GDP data coming in positive. Who knew higher GDP? Let's see if it changed the rate cut odds is what I want to see, right? So GDP came in stronger than expected, 3%. Let's see if it changed the rate cut odds. Here's the CME Group watch page. Let's refresh this. Still 2.1% for September. Yeah, so look, it did change the odds, right? So one of the things that this GDP did is it pushed the odds of a September cut down by about 4%. So now we have 4%. 4% less odds of a September cut now from this GDP report. 4% less odds. This was about 65 to 66% likelihood of September cut. Now we're all the way down to about 62%. So we decreased by about 4%. NASDAQ still incredibly flat here. We're basically not moving. We're in this tiny range. I think the market's just waiting for the FOMC decision here. So we're in this tiny small range. And again, we'll see what happens, chat. We'll see what happens. But that is what's going on right now. We got the August 1st deadline looming. We've got PCE inflation. We've got payroll data on Friday. We got the Fed decision today. So just be ready. Yeah, we got Microsoft and Meta earnings as well. Look at this rip back up here. Look at this move. Is there a reason for this move? All right, so the president post second quarter GDP just out 3%, way better than expected. Too late, must now lower the rates. No inflation, let people buy and refinance their homes, end quote. Again, this is what the president just said. Second quarter GDP. I mean, if you really want to help people buy homes, in quantitative tightening for mortgage-backed securities. That's what you do. In QT for MBSs. It's still going at full steam at what they were doing after like 2023. So if you really want to bring down mortgage rates, in MBS quantitative tightening will help. All right, let's do another poll here. We did this poll. We're going to ask people, after most likely pausing today, does Jerome Powell have a hawkish or dovish tone? Okay, guys. Again, that is the poll. After most likely pausing today, does Jerome Powell have a hawkish or dovish tone? First move is not always correct. Yeah, I mean, GDP 3%. Quarter two GDP 3%. Now, what this means is less likely that we get rate cuts. It means we're less likely to get rate cuts. Again, the odds for a September cut decreased about 4%. And this might continue to move. Let's see. Has it moved since I said that? September. Okay, it's gone back up a little bit. So we're at about 64 to 65%, which was 66 to 67%. So the net impact of September rate cut odds has been about 2% decrease in odds, which is not much. Again, we got a 2% chance of a cut today, and that's not freaking happening. So, dude, I gotta trust my algorithms here, dude. Like, look at this. Look at that. Boom, right there. I gotta trust my own algos. It's a Pine script code that I've been building. I gotta trust my own algorithms. Pretty solid here. Short, boom, long, boom. It's okay. Do I need to turn my mic up a little bit, guys? I think I asked this earlier. Do I need to turn my mic up or is it perfect? Say up or perfect, depending on which. If you think I need to turn it up, say up. If you think it's perfect, say perfect. It's one of the top 3 mic sounds ever. Let me know. Perfect? Okay. How many times does random news just disrupt algos? Probably a lot. And listen, I've said this once, I'll say it again. Alright, and this might rub some people the wrong way, but I'm gonna say it anyway. Alright? Fundamental moves trump, pun intended, technical moves. Okay? And so you can have the best technical pattern setup in the world. If CPI shows up at 1% versus 2.5% expected, you better believe we could have the best technical short pattern in the world. It's not going to freaking matter. Market's going up, most likely. You know, why? Because fundamental economic moves trump technicals, almost always, depending on the catalyst. Now, if it's a big catalyst, that is. If it's a small catalyst, they have less sway. But if it's a big catalyst that people are paying attention to, you better believe it's going to cancel out any big technical pattern that you like, you know, with some exceptions. You know, it's never, you know, nothing in finance is ever absolute, you know. And so nothing's definitive, nothing's absolute. Only Sith and brand new traders deal in absolutes, guys. GDP came in at 3%. You can see it at the bottom of the screen. 3% GDP versus 2.5% expected. We need cuts too by the end of the year, at least 1.5% or 150 basis point cut. Why pizza? Do you think? What's the argument for a cut? I'm not saying you're wrong. I'm trying to get a conversation going. What's your argument for a cut right now? Why do you think we need a cut? Again, I'm open to talking about it. I really am. But I went over this conversation earlier. And again, I'm not really against 125 basis point cut. I would be okay with cutting today. Either cut or MBSs if you want to bring mortgage rates down. MBS QT, that is. But I heard this argument yesterday, and people were like, well, he cut under the previous administration, but he won't cut now. Again, the cuts he did at the end of last year benefited the current administration. They didn't benefit the previous one. There's a lag to rate cuts. You know, so like him cutting a full percentage point at the end of that last year benefited this administration. Don't get it twisted. It's not like there's too much of a lag in rates. And so when you look at the history of it, he cut a percentage point last year, paused until now, and then he's probably going to cut in September. If he doesn't cut in September and we don't get any spikes to inflation, then I might say Powell's wrong. You know, but at this point, I'm somewhat in between. It was September, November, and December last year. He did a 50 basis point. I covered this when it happened. He did 50 in September, 25 in November, 25 in December. It was 3 separate rate decisions, 3 cuts, full 100 basis points, 1% is what he cut last year. And again, I'm not against you if you're like, listen, I'm not against anybody on the political side thereon. I'm really not. I think you could probably argue a rate cut right now. You could certainly argue ending quantitative tightening, especially for mortgage-backed securities, if you want to bring interest rates down. Mortgage rates, So again, I'm not against you. I just don't think. I don't think the answer is very obvious. I think we're somewhere in the middle, and at the same time, rate decisions are supposed to be proactive, and so we're supposed to avoid economic weakness through rate decisions. But GDP is 3%; it just came out, and so now that is a lagging GDP. We'll see what the expectations are for Q3, which is what we're currently in. We're not in Q2 anymore. This is lagging. The way GDP drops is it has the advanced estimate, the first revision, and the final revision. So it has 3 different drops of GDP before it's finalized. Last Q1 was negative 0.5%. Now Q2 is looking like it's going to be 2.5 to 3%. But this is always subject to change. We have an updated one next month that we're going to get in August. That's going to update the one we got today for Q2. I think people get too wrapped up in politics. And I don't look at any of that stuff. I just look at rates. And, I think you got arguments for both. I think on one hand, you got negative Q1 GDP. You got tariffs looming. And you got, for the most part, price stability, which would side with the side of rate cuts. On the other end of that, you got 3% GDP. You got payrolls coming in stronger than expected today. And you have inflation risks of the last 5 years. On the side of no cuts, so I think you could argue either side fairly. I don't think it's obvious. But again, I think you could probably argue a cut today. I think you could certainly argue ending QT for mortgage-backed securities as well as treasuries. But yeah. Now, the big payroll numbers are going to be this Friday at 8:30 Eastern Standard Time. So again, tune in on Friday because that's when the big payroll numbers come out, called non-farm payrolls and employment report. Unemployment drops as well. Unemployment this weekend, or this Friday, is expected at, for July, unemployment is expected on Friday at 4.2%. So it is expected to uptick a little bit. So again, that's an argument for rate cuts as well, although GDP certainly shows the other end of that. Yeah, I don't want to see quantitative easing. I don't want to see money printing. People are saying QE is more important right now. We should not do QE at all. QE would make inflation spike faster than almost everything else. So we should not be doing QE at all. Hey. Okay. All right. Love you. I know. All right. Love you. All right. Yeah, so QE would make inflation spike more than anything else. Again, I go over this. I'll go over it again today because I think it's more relevant than normal today. But 2020 happened right here. Let's say this is 2020. Okay. 2020 happened. We had lockdowns, supply chain problems, all these problems happened. It caused a lot less people to be working, a lot less people to be spending. GDP started to go down. The Fed stepped in, tried to be proactive, and they brought interest rates down to almost zero. They did quantitative easing. They printed money. They sent out stimulus checks. They did all these things. And by 2022, inflation spiked up to 8 or 9%. And so then the Fed says, oh no, by 2022, 2023, inflation starts spiking. And so then the Fed does a bunch, and this let's just say these are rates. Let's just say, hold on, let me where's it at? Right. By 2022, inflation started to spike. So the Fed starts raising rates, turns restrictive. After being really loose for years, they turned restrictive and they raised rates like 450 basis points. And then they paused them there until late last year, right? Then they cut rates a percent, like 100 basis points. And then they paused since then, which is where we're at now, right? But the inflation that people are eating right now that they're unhappy with has to do with this right here. The inflation has to do with this economic stimulus right here. QE, stimulus checks, supply chain problems. That's the inflation that people are still unhappy with right now. That's why you look around, inflation's under 3% right now. People are still unhappy about this right here. They're unhappy about this right here. The QE, supply chain, stimulus checks, all that stuff happened in 2020. And yeah, and that leads us to where we're at now, which we cut a full percentage point here, and then we're kind of paused. If you take a look at the federal funds rate graph, it'll confirm what I'm showing you right now. If you take a look at like the Fed rate decisions, and again, the federal funds rate, here's a 10-year graph. It influences the most home equity lines of credit adjustable rate loans because those are the rates that get adjusted to an extent. But again, rates went down to almost zero following 2020, kept them there until 2022. Inflation started to spike, did a lot of rate hikes. My graph was a little off because we did a lot of rate hikes to try to save us from 10% CPI. And then we paused rates for a year, and then we cut 100 basis points. And now we're right here. So that is basically what's going on in monetary policy over the last 5 years. But again, the reason people are unhappy modern age from inflation is from that specifically. And so people are arguing QT. I do not want to see quantitative tightening. Or I'm sorry, I don't want to see QE right now. It's too risky. That will spike inflation more than anything else. And when inflation starts to spike, it can get really, really bad. Really, really bad. And so I don't think there's any reason we should do QT. I don't think we have anywhere close to the economic weakness we need to justify printing that much money right now. And I think if you want balance in QT, I'm okay with that. QE is basically the Fed creates online money and then uses that money to buy bonds and other financial assets like MBSs. Injects liquidity into those markets, brings interest rates down in a lot of ways. It's a more desperate decision by the Fed. So the Fed will just straight up cut rates in one end. If it's more desperate than that, like 2020, and again, I'm not mad at them for 2020, because in 2020, stuff was going down. You know, people were unhappy. They have to be proactive. And if they didn't do anything in 2020, people would be complaining about that too. They'd say, hey, they're just sitting here. They're not doing anything. And so I'm not mad about 2020 QT or QE. But we don't have anywhere close to the economic weakness, especially after 3% GDP today, to justify any type of QE money printing. We just don't need it. Now, people might want it for Bitcoin and other stuff, and I get it. But if Bitcoin increases, but everybody's paying 2 to 3x more in prices everywhere else, does it really benefit people? That's the question you have to ask yourself. All right, guys, we got the opening bell in about 35 minutes. Stick around. We'll trade the opening bell live. People know, but dude, my altcoins need to run and we're almost out of time. Hey, have a good day. On. Good luck today. Remember, not guilty. I feel like if I went to jury duty, I'd just naturally be not guilty. I'm sorry, unless the person did something terrible. You know? But if he ran a stop sign, not guilty. All right, so we're back over 500, but we're mostly moving in like a stagnated way or sideways. Nvidia's up a little bit though. It's elevated today. We'll see if it continues up. Oh, Powell says something like no rate cuts this year. You wouldn't make it past jury selection with that mindset. I mean, I wouldn't tell him. I wouldn't tell him I'm like that. I wouldn't tell him, hey, I'm just gonna vote not guilty no matter what. Honestly, I might, because maybe it'll get me out of jury duty. All right, we're down to 505s right now. Dipping down a little bit here. What's up, Troy? Good morning, John. Appreciate the consistency. Daily live stream. Hey, thank you, man. The White House is supposed to release the crypto policy report today. Yeah, I saw that yesterday. We'll see what it says. When is the rate decision? I'm not going to say it's in the title of the stream that you're in right now. I'm not going to say that. I'm not going to say it's also in big yellow letters at the very bottom of the screen, potentially at the very end of it. But there's a top 3 chance it might be. It's all love. I'm just messing with you, kind of. All right, so Wells Fargo Investment Institute raises the S&P 25 year-end target range to 63 to 6,500 from 59 to 6,100 and raised 25 U.S. GDP growth forecast to 1.3 from 1%. All right, we're starting to dip down a little bit. We're at 486s. I might buy this dip. Again, I'm a little mixed on terms of what this GDP data means. I mean, it means less likelihood of rate cuts. I'm gonna add into this if we get a pop back up. The combine account, so it doesn't mean too much. Meta says developing superintelligence is now in sight. Skynet? I don't know, man. I was having some interesting philosophical conversations regarding AI with some family members. You know? And I'm not going to get religious at all. But I think AI and simulation theory can confirm. Not confirm, but it certainly makes a lot of the religious texts, which pick one, it doesn't matter, more plausible, I think. All right, so I'm gonna end up cutting this. Simulation theory essentially says if it's statistically possible for us to one day experience reality through AI systems that are indistinguishable from what we currently see and feel, then it's actually like 1 billion to 1 more probable that we are already in that simulation. You know. Anybody hear that people are taking out loans to throw money at the market? What do you think of Jay Powell today? I think Jay Powell will... I don't think he's going to pander through rate cuts. I think he's going to pander through hawkish tone and sentiment during the call. Or no, I'm sorry, dovish tone and sentiment during the call. Or during the press conference. I think he's going to be dovish. That's what I think. And I've talked about this before, but like, so there's a video game called No Man's Sky. Right, it's basically a game where you can travel to different universes, visit the world. They're artificial, they're automatically like programmed into it. So like they build their own universes. The game builds its own universes. Creates its own universes. The game does. Now they're thinking about implementing AI systems into those universes, right? And say AI gets good enough to where it starts asking, "Hey, what am I doing here?" Which I think it probably is right now. You know. All right, guys, we got about 25 minutes until the opening bell. Maybe I've watched too much Black Mirror, you know? That's definitely possible. That show will mess with your head. Mess with your head. I like the Star Trek one, though. The Star Trek one's good. Alright, we're still breaking down. We're testing lows. I don't mind the simulation theory. I think as AI becomes, it's much more plausible. I'm not going to say it's what's going on, but I think people think it contradicts like religion, and I don't think it does. I think it actually makes a lot of it more plausible. All right, we're at 470s. Bouncing here at this low at the day level. You can see Amazon turn, Tesla turn, Nvidia is still kind of holding up. AMD dipping down, Apple's turning. Apple's now technically red on the day. It's been red for the last few minutes though, but Apple's starting to break down. Here for the playlist, not trading. Top 3 playlists ever. That's a cool book, Tony. Does GDP include revenue? I have to look. All right, so we're starting to break down. We just cracked lows. All right, so we cracked lows for a split second. Got down to 470. This is lows, not of the day, but of the last like 3 or 4 hours. The lows of the day are at 23,463 on the NASDAQ. But again, as I suggested earlier, I think because we have a lot of catalysts for the rest of this week, we got the Fed decision today, we got PCE tomorrow, jobless claims tomorrow, non-farm payrolls Friday, unemployment Friday, and then more than that, earnings today, all that stuff. I think because of that, it's very plausible that we have sideways choppy neutral activity today. Like we go down to the bottom of the range, we go back up to the top of the range, and the market kind of behaves that way until we get closer to the FOMC meeting or earnings that drop in the evening today. I think that's the most probable thing. But you never know. Sometimes the market can run big, sometimes it can pull back big. We'll see. All right, guys, we got the market open in 23 minutes. All right, so we did a poll. We asked people, is Powell's tone more hawkish or dovish today? 56% think he's more hawkish. 44% think he's more dovish. Yeah, I don't know, Mr. Scruff. I mean, I think this is an interesting question, but I think you have to look at how much AI has grown in 3 years and then extrapolate that over 100 and imagine where AI might be at that period of time. And then use that to think about where we could be right now in terms of everything. That's what I think about it, at least. I think it's an interesting conversation. I don't want to get too deep in it and kind of distract me from watching finance, but I'm a huge sci-fi nerd, so that probably helps me be a little bit more interested in these conversations. Inflation's still relatively low. I mean, it's not going to go straight down. Sometimes it's going to go down, up, down. Most of it's under 3%. PCE inflation drops tomorrow. PCE inflation is expected at 2.7%, the same as last time year over year, and 0.3% month over month. So it's mostly flat month to month for PCE inflation. Jobless claims are expected to uptick a little bit, though, at 222,000. And again, the problem is that if inflation is elevated, we should not cut rates, right? Like the one thing stopping us from getting deep rate cuts is inflation. If inflation's elevated, they're not going to cut rates and stimulate the economy, especially if the economic and labor market conditions aren't justifiable. And so, yeah, I mean, we're in a situation where in order to cut rates, you need two things. You need weak economy to justify it, or at least signs of incoming weak economy if you want to be proactive, as well as price stability. And I think we kind of have price stability, to be honest. I think inflation's relatively low. It's under 3% in most metrics. And I think that's good. I mean, I know the target's 2%, but again, I use this analogy pretty regularly, but I want to make $1 billion. If I make 900 million, I'm going to be okay with that. August 1st is big, but we've already gotten deals done. And didn't the U.S. and China extend the August? It was like August 12th deadline for them. Let me look this up. U.S. and China have agreed in principle to extend the tariff truce beyond August 12th, although it hasn't been finalized yet. After 2 days of talks in Stockholm, negotiators from both sides declared the discussions constructive and candid and say they will work on extending the 90-day tariff pause beyond August 12th. It's conditional, hinges on the sign-off after consultations. So, keeping tariffs at 30% on Chinese goods and 10% on U.S. goods provides temporary stability to trade in markets. If the extension fails, the threat of tariff escalation looms. So they've agreed in principle, but nothing hard yet. And so, yeah, with that said, Friday is even more important. Yeah, India news that tanked markets earlier was that the president came out saying that what was the India news? The India news was, yeah, so the president said India would be paying a tariff of 25% plus a penalty from August 1st. So, not the most optimistic news regarding India trade deal with the U.S. That came out earlier, dropped markets. This was when that news came out. It was either here or here. I think it was here. Yeah, it was right here. But this is when the India news came out, to be honest. Right here. And you can see it dropped us originally to test these lows, and now we're kind of back to that level. All right, guys, we got the opening bell in 15 minutes. We'll see what that looks like. Yeah, we'll see. I don't know. I think, you know, I talked about this earlier, but I think if you're going to announce trade deals, you're going to do it like leading into the deadline, because that's going to have the most probable optimistic bullish reaction to it. If you announce it too early, it gives markets time to bake in. If you want the market to go up, that's what you do. I think that's, again, I said this a couple weeks ago, and since then we've got a couple deals with the European Union that were announced prior to this, or the week prior. Like I said, I think if you're a politician, that's what you're going to do. And so I think we still have a few days for them to announce more trade deals, but it's only 1 or 2 days left. So tariff revenues aren't counted as GDP output. It measures production of goods and services, not tax collections like tariffs, but they can indirectly influence GDP. So, reduce imports and trade distortions that temporarily make GDP look stronger as possible from tariffs, sure, but they're not going to directly influence them. Not very optimistic about the deals. I think the European Union deal was good for the US. I don't think it was necessarily bad. I didn't think it was as good for Europe, but I thought it was good for the US. Is there a reason why Powell will cut the rate? We're probably not cutting today. But if Powell did cut, it would be from economic weakness and price stability. It's the dual mandate they want, but they want a strong labor market and price stability is the dual mandate. But if they did cut rates, it would be from weak economic reports and low inflation data, which we got lower inflation data. We don't really have the weak economics labor market to justify it as easily, though. So it's somewhere in the middle, I think, right now. I think you could argue a 25 basis point cut if you continued QT, or a pause if you end QT today. So we'll see. What I'm going to be paying attention to is if Powell updates us on the current state of quantitative tightening that we're in. What I want to know. Yeah, the tax that really bothers me is property tax. I hate property tax. You know, like you don't actually own anything if you got to pay like a big percentage every year in taxes on that thing that you own. And so, dumb, unnecessary. I think there should be exemptions if you're an old lady. Like I think after 65, you should pay no property taxes. Yeah. We'd still get in money from them, but like if my mom buys a house and she's owned it for 50 years and the price of that house has gone up dramatically and she just wants to live in the house she bought 50 years ago, but you're trying to make her pay 5, 10, 20, 30 grand a year, maybe not that much, but in property taxes, that's absolutely ridiculous. If you own something, you should own it. We already get triple taxed anyway, property income. What's the other one? Property income and sales. So we already get triple taxed anyway. And so I'm very much against property taxes, especially for people over 65 years of age. I think once Social Security kicks in, property tax. Yeah, I'd be okay with that drop. You should only be charged once for prop tax and you sell it 100%. I agree with that. That's fine. Sure, get your cut of it when it's sold for big gains or whatever, but don't charge me yearly. Yeah, let's say you got a $500,000 property, and let's say you're getting charged what, 2.2% or whatever yearly. That means you're paying $11,000 a year. You know, say you own that house for 20 years, you're gonna be paying $222,000. Ridiculous sum of money. Cancels out a lot of gains you make from it. Palantir starting to move up. At 157s right now, 157s. All right, guys. So GDP 3%, ADP non-farm data 104% or 104,000 versus 75K expected. Both economic reports we got this morning showed stronger economic data than expected. Again, this is heading into the FOMC. Kraft Heinz CEO says board working with urgency on evaluation of strategic options. President releases the crypto report amidst details on Bitcoin strategic reserves. The president just released the crypto report. Bitcoin didn't really move at all from this. All right, so the odds of the Fed cutting rates 2 times at least in 2025 have fallen to only 36%. Odds of 1 cut are up 25%, and the odds of 0 cuts are up 20%. Again, it's going to be an important day to listen to what Powell says, because again, I think he's going to, I hope maybe it's confirmation bias. I hope he is dovish. I hope he pauses, but he's dovish. Maybe he ends QT if he wants to balance it even. JP's at 230. Reports at 2. All right, guys, we got about 9 minutes until the market opens. Let's see what we get. I'm interested to see if we get some good stuff today. Yeah, y'all hit that subscribe button. Hit the notification bell. I appreciate you guys. Somebody said, personally, I like hawkish Powell. Yeah, I mean, I'm not... Yeah, no, well, Texas, look, and I love Texas to a certain extent. Like, I like Texas. Texas is nice. Texas has a lot of good things about it. Okay? Don't get me wrong. Like, Texas has got some good stuff. But, and there's no state income tax here, which is good. Yeah, so Texas is good in a lot of ways. But property taxes are obscene here. They're ridiculous. They're unnecessarily high. And so no state income tax is cool and all, but they compensate it through property taxes for sure here in Texas. The other problem I have with Texas is that you got these big dinosaur politicians that control everything. And like Texas is all about freedom. And that's like the slogan is Texas and freedom and all this stuff. But there's no ballot initiatives. Like you can't vote for things that you want. You basically got to hope your politician sides with you, which a lot of the time they don't. And so Texas is cool. The economy's good here for sure. I heard they were trying to get rid of capital gains taxes in Texas. So if they do, you know, I'm for it. Texas. Please get rid of capital gains here in Texas. I'd rather you get rid of income tax altogether, but cap gains is a start. It's a start. Rusty, thank you for the $10 donation, brother. I appreciate you. Thank you, sir. Yeah, property taxes in a lot of places in Texas. Like, if I go to Louisiana, for instance, and I own a $500,000 house in Louisiana, it's like 0.6% or something like that. Or no, wait, my math is way off, sorry. Forgot a decimal point there. If I have a $500,000 house in Texas, it's like 0.6% here. So it's $3,000 a year, fine. Sign me up for that. In Texas, it's almost 4x that in a lot of places. So you got a $500,000 house, you're going to be paying 2-point-something% in a lot of places. 2.4%, 2.2%. And so your property tax is going to be $10,000 to $12,000 a year versus 3 in a lot of places. So again, while there's no state income tax in Texas, which is cool, their property taxes in some places is 4 times higher than others. So all right, guys. Hey, we got 4 minutes left. You ever get bored? No. Do I ever get bored making money sitting at my computer? No, not really. Every day's a new day in finance, so it's always something to talk about. Like, there's always something to do. Usually some days are boring. It's nice though, because like I traveled a lot this summer, was still able to stream every big day, and so it's nice because you can travel and do stuff, and you're not like, I'm not tied to like a job. And I make more than most people do doing this, to be honest. So pretty good job. All right, guys, we got 3 minutes until the market opens. Dude, my eyebrow is like twitchy. Only my left one. It's only this one that you guys see. Turn this light down. All right, guys, we got 2.5 minutes. We're gonna day trade live at the open. Let's see what we get. Light off here. I don't think it's me. All right. Yeah, they didn't include, they omitted details about Bitcoin reserves. Do graffiti? I mean, not really. I can kind of do graffiti. That's about the closest to graffiti I can do. I skateboarded. All right, guys. So Apple just shot up. So there's some good news for Apple maybe here. Look at Apple. It's what's driving the market up right now. It's at 211.70s. 211.70s. We got about a minute until the opening bell. Here, I'm gonna do you guys a favor. I'm gonna turn down the opening bell sound. I've been getting complaints it's too loud, so. All right, guys, here we go. 45 seconds. 45 seconds. There we go. That should be better. Just turn toss down. All right, guys, 20 seconds, 20 seconds. All right, about 10 seconds left. Hit the live button next to the play button. Make sure you fully catch up to the stream. We appreciate it. Yeah, we'll see if we get some deals announced later. All right, here's the bell. Still kind of loud. I tried to lower it for you guys, but NASDAQ just took a turn for the downside here. Apple, Tesla shooting up. It's at 324s almost, 324s. Apple's been up too. Nvidia's dipping down since the opening bell. We got AMD falling down a little bit, Intel falling down a little bit. Remember, today we got Microsoft and Meta earnings. Both of those are heading down some since the opening bell. All right, NASDAQ turned. Starting to decrease some too here. Yeah, Powell's not going to cut today, I don't think. Palantir shooting up. Palantir up to 189s, 159s. I'm gonna wait 5 minutes to trade, and then we're gonna trade some. Again, check out Top Step while we're waiting to trade. Check out Top Step. No PDT. We're on futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, some currencies. Most day traders lose money, but it's a lot cheaper to try this. If you fail, you're out $50 a month for the middle one, $100 for the top, or for the $50 a month for the base one, $100 for the middle one, $151 for the top one. Best payout rules in the game. If you pass a 50K funded account, 90% split. you get to keep your first 10K prior to that split kicking in, 90% split afterwards. Some of the most reliable payouts. You can day trade the S&P, NASDAQ, Dow, Russell, gold, commodities. Get you around the PDT rule. They've paid out hundreds of millions, fund thousands. Beautiful way to learn how to day trade. Most day traders lose. Understand all the stuff on screen. I can't guarantee anything. I'm not an investment professional. I'm not liable if you lose money. Always make your own assessment, trade smart. Again, I can't guarantee anything. With that said, markets are starting to turn back up. Tesla is up to this 324 level. So is Nvidia. Nvidia's up to 177s here. So I might actually buy this. It's a little bit early for me to trade, but we're trading on a challenge account, so we can justify it a little bit easier here. We're gonna add to this, see if we get some pops back. The range is still pretty small. We're in 12 contracts and we're down like $6. You don't love to see this though. I do think we're gonna chop today, so I could add to this, but I think I'm just gonna cut it and look at my wins. We're already up $1,000 in that something prior. We'll put our funded account up. See if we get something good there. Got a little bit of a rebound here back. All right, let's see if we get chop. I mean, we're starting to bounce back some here. Kind of ambiguous right now, though. We're starting to creep back up. All right, so we did just make some money back on our challenge account that we lost on. Now we're up $600 on the day. I'll show you guys the challenge account. We ended up buying this dip and riding the ramp back up. I was pretty confident we'd get a bounce. I thought it was just trying to fake me out. So you can see the trades here. See these right here. We got the bounce that we wanted. We'll see if we can around with this, but I'm gonna put my funded account back up so we can actually trade. Look at us reject at 486 though. The range is still pretty small on the day. Don't think it's possible we get choppiness today. Although we might have a bigger range here. We'll see. All right, so we're up about $900 on that challenge account. I'm still waiting to trade on my funded account. We are getting a rebound. India remains engaged with the U.S. on a trade deal, according to a government source. And the China Foreign Minister Wang Yi met with the U.S. business delegation in Beijing, according to Foreign Ministry. So, we got some news there. We are getting a rebound back up. Again, a big range, but sideways. What I'm assuming we get today, leading into the FOMC decision. Alright, I don't know if we're gonna move up or not. Kind of indecisive here. Look at Tesla still weak. Nvidia's still pushing though, and Nvidia's not that far away from its all-time highs. We'll see if we get some optimism. Right at the 200 exponential. You get big range, but sideways, I think makes sense today. See though. Gonna push back up, it looks like. Apple's turned red, slightly green, or slightly red on the day. I mean, I haven't been trading my actual funded account. I'm waiting for some of this volatility to settle down a little bit. I have been trading my combined account back and forth, but show you these. Kind of see. Back and forth, but mostly green. This one. Do you think we might have a sideways range today, though? So I'm trying to be cautious. I'll trade my actual funded account pretty soon. They were coming back down. I'm gonna buy this. This is my funded account, by the way, so this is my actual fund. Add a little bit to it so we can catch a bounce. Figure it out. And we took half off there. Got the rest there. Okay, good. So we just made about, we made a little bit just now at our funded account. Trying to catch this 485 bounce, which is what it did. It bounced right around 45. The problem is that Tesla's starting to break down. So is like Apple here. Gonna put the Nasdaq right here, the micro Nasdaq, but Nasdaq nonetheless. Look at Apple fall. How you guys doing? You guys red or green today? Look at that 45 bounce. We did get a bounce at 45s. Yeah, I mean, it could always change quickly. I tend to think we're going to come back down some, but I really don't know. It depends on what Apple and Tesla do. And I could have there's so much variance with short-term day trading moves that nobody freaking knows what's gonna happen. You can only guess. Red, green, red long, big green. I just think it's very possible we go like this today, guys, getting into the FOMC. So if we're at the top of the range, I get more interested in shorting down to the bottom of the range and top, riding it to the top, shorting bottom, riding to the top, shorting bottom, kind of attacking a big range but a neutral place. And again, it doesn't matter. We might just, some days we just run like this into the FOMC, and other days we just drop like this all day leading into the FOMC. So it's never like a certainty. Like, I'm just straight up guessing here. I try to make sure people understand that. We haven't had many losing trades since the opening bell, though, so I'm not confident enough to take either direction here. Highs of the day are still way up here. 522s. Top of the range is actually like. Nvidia looks strong too. All right, so India market regulators formally expand investigation of U.S. securities firm Jane Street, according to sources. China's foreign minister said we should establish more channels for communication and consultation, according to the foreign ministry. And they said they're willing to strengthen contacts with the U.S. and avoid miscalculations regarding China's foreign minister. He said China and the U.S. should avoid conflicts and confrontations. So, that's the breaking news I'm seeing. Yeah, well, good luck, Brian. All right, we're starting to come back down here. That 485 level is holding actually pretty steady. Palantir's up a decent amount today too. Wait, let me make sure we don't have any other economic. I don't think we do. Oh. Bank of Canada rate decision happens. They're expected to pause rates at 2.75%, and then we have pending home sales at 10. We got the Bank of Canada decision. Microsoft's kind of flat. Meta and Microsoft are slightly neutral, We're still testing the top of that range, though. We'll see what happens. All right, here's the Bank of Canada rate decision. Let's see what they do. They're going to pause rates probably. What do you think Bitcoin does today? I think it depends on the tone of Powell during the press. All right, SPY, NASDAQ broke highs of the last few hours here. Tap this 511 level. All right, we're now over a lot of the resistance, but we're still getting rejected at 511. I mean, this is the high of the day. Tesla's starting to rebound, and Nvidia pushing up towards all-time highs is what's driving this. All right, so the Bank of Canada, pretty sure they paused rates, but let me see. Yeah, Bank of Canada rate decision 2.75% versus 2.75%. So they paused rates. They leave rates unchanged at 2.75%. All right, so NASDAQ's getting up there to the high of the day here, which is right here. Starting to pop. Nvidia just broke highs of the day too. Nvidia's getting up to 178s. We just tapped highs. Just broke highs for a split second. Yeah, so the Bank of Canada statement says, while some elements of U.S. trade policy have started to become more concrete in recent weeks, trade negotiations are fluid. Threats of new sectoral tariffs continue, and U.S. trade actions remain unpredictable. While U.S. tariffs have created volatility in global trade, the global economy has been reasonably resilient, according to the Bank of Canada. They lowered their 25 and 26 growth outlook and inflation outlook. All right, guys. So we do have pending home sales data today. 12 minutes. All right, how you guys doing? We're about 20 minutes after the bell. Are you guys red or green so far today? Let me know. All right, so Bank of Canada's Macklem releases a current tariff scenario as well as two alternative scenarios, one with increase and another with decreased tariffs. Asset says GDP data shows strong growth. Bank of Canada said risks of a severe and escalating global trade conflict has diminished since April. They said Bank of Canada's current tariff scenario shows GDP grows by about 1% in second half of this year and then picks up, hitting 1.8% in 2027. Inflation stays close to 2% over the horizon of scenarios. They said we have stepped up our regional outreach to help understand the effects of tariffs and are adding new questions to surveys of households and businesses. Again, give me a follow at Beginner Trades. We cover all the breaking news live on there as well. All the big news. Like what I consider big news, we'll cover. You know, like anything I consider big news, I cover. Again, if you haven't already, at Beginner Trades, I appreciate it. Help me hit. I'm very close to hitting 4,000 followers. Tesla turning down, Apple turning down. Green now, red on crypto. PA and NW just dropped because they were buying another company. Palo Alto. Let me look them up. They plan to purchase CyberArk in a $25 billion deal. He said CyberArk is poised to disrupt this market. Yeah, I mean, I guess the market didn't like this deal. Palo Alto Network expects deal to be accretive. Free cash flow per share in fiscal year 28 following first full year of synergies. Yeah, so just short term, they're going to have some growth problems from this deal, but some worse margins. So that's essentially what's going on. All right, guys, less than 10 minutes before pending home sales. I think it's pending home sales. Yeah, it's pending. Pending home sales expected at 0.2% month over month for June. Drops in about 9 minutes. Again, I've said this 1,000 times, but do you guys understand why, like, here's a milestone level here. High of the day, right? Do you guys understand why I don't target breakouts of that high of the day level? And instead, I want to attack a range to test it. Now, remember, I thought we would range up and down and sideways, and that's kind of what we're doing today. But I like to attack the test of these levels. Why? Because a lot of the time when we actually break these levels, like this, we don't actually go anywhere and we instead dump down. Why does this happen? Because people are taking profit at that high of the day level. That's the top of the range. Again, new traders attack high of the day breakouts, desperate for momentum. Experienced traders take profit at the top of the range, which is here. And what happens? We come right back down, especially in days like today. But again, there's always variance. But I hope that makes sense. Nothing's definitive or absolute. Everything can change. Canadian swap market sees 19% chance of a cut in September, down from 22 before the decision. Assets also coming out saying the Fed is very data dependent and expect they will catch up soon. Kalshi has 97% odds of no cut today. All right, so we're starting to head back down here. Yeah, I mean, Nvidia's up to 178, so it's one of the more optimistic looks at the market today. You take a look at all-time highs, they're right here, and Nvidia's right here, so they're getting pretty close. We'll see if it happens, but it's one of the more optimistic stocks today. It's pushing up, breaking highs, looking strong since the open. Nice bull trend since the open. But because the NASDAQ and the S&P are indices, they're combined, they're basically a bunch of stocks combined together. Apple heading down, one a really heavily weighted stock, has made chop since the open. Tesla is kind of flat too. Tesla's right at the previous close. Apple slightly below it, so Apple slightly red on the day. Tesla's flat. Nvidia's green. Palantir's green. Meta's red. Microsoft's red. So. All right, guys, we got about 6 minutes left. Do a pending wholesale show up us. Might not break down. We might just move sideways here in a range. And maybe this is the bottom of the range. Or we could move all the way down and start going like this. I don't know. Asset says EU and Japan deals to help with capital spending boom, according to CNBC. He's hopeful that India will open up its markets to us. Tariff revenue important, deficit reduction, and tariff revenue is important. We at the White House 100% respect the Fed's independence. So I said it once, I said it again. They're not going to fire Powell with freaking 8 months left or whatever there is in May. He's supposed to step down next year. They're not going to let him go. It sets a bad precedent. I don't think they're going to do it. But I've been saying that for months now. All these people are trying to they're trying to get people to tune into them. So they're like, oh, Powell's going to get fired. They're just kind of telling you what you maybe want to hear, what might make you click. But it's always been a pretty low probability, I think. Microsoft Meta doesn't really have a business model. Yeah, bro. You know, when I think of companies that are just, you know, bad, you know, Microsoft Meta, of course, you know, terrible companies, not worth anything, you know. I'd give away Microsoft shares if I could. I hope you can understand the sarcasm in what I'm saying. Maybe it's not clear enough. Those are some of the strongest companies in the world. Meta owns WhatsApp, it owns Facebook, it owns Instagram. You don't think they're making money? They're also getting involved with AI. Meta's AI llama system, and you know, AI systems are incredibly powerful. Microsoft owns a piece of OpenAI in general. Most people in the world use a Microsoft operating system. But yeah, they don't have any business. What's a business model? Again, sarcasm. All right, guys, we got 4 minutes left. 4 minutes until pending home sales. Future is artificial intelligence. Going back to the simulation theory and you know how good AI and AI systems are going to grow. They're going to grow profoundly in the next 20 years. Now, who knows if we're going to crash prior. The internet was a justifiable, real, like useful technology, especially in hindsight. You look at how powerful the internet has been and how much it's influenced the world. But we still had one of the longest bear markets in history following 2000's .com internet boom. And so it doesn't mean we're not going to crash. But regardless of what markets do, AI is going to be an incredibly powerful technology. It already is, but it's going to be more so. That dynamic is going to get more powerful for AI. Again, I always like look at how much it's grown, and it might not grow at the same steep curve that we've seen, but even if it grows at a quarter of what we've seen over the last 3 years, every 2 or 3 years, it's still going to be incredibly powerful within 20, 30. You got to look at where it's going, and I think I think it's a little bit scary, but I think it's predictable as well. The success of it is predictable. I don't know what it's going to turn into. And I think big tech understands this more than anybody. That's why you see every big tech company in the world getting involved with artificial intelligence right now in some form. Some are lagging, like Amazon, Apple. Others are thriving, like Meta, Microsoft, Tesla, to a certain extent. And so everybody's getting involved with AI. All right, guys, we got about a minute and a half left. All right, pending home sales dropping in about a minute. All right, guys, 45 seconds. All right, let's see what pending home sales show up as. We got the FOMC decision live at 2 p.m. Well, when I said operating system, I mostly meant computer operating systems. But if we're talking about mobile, yeah, Google's got that on lock with Android. Again, 15 seconds. 0.2% is what's expected for pending home sales. Let's see what we show up as. Again, hit the live button next to the play button. Make sure you're fully caught up on stream. We appreciate it. The data comes out right now. Okay, negative 0.8% pending home sales. Negative 0.8% for pending home sales versus 0.2% positive. Negative 0.8% for month over month for June pending home sales. Weaker than expected, almost negative 1% versus 0.2% gain expected. So weaker home sales than expected. Not really going to move markets, especially on FOMC, Meta, Microsoft earnings day. But we'll see what happens, chat. We'll see what happens. Yeah, I mean, and again, if you want to help support me, check out Top Step. It's the only way you should be learning day trading, in my opinion. Most day traders lose. You try to fund your own account 5, 10, 20, 30 grand. You're probably about to lose that account. Let's just be honest here. Most day traders will tell you that. Limit your risk. Try $50 a month. Top Step base account. If you pass it, 50K funded account. If you fail, you lose $50 versus 5K, 10K, 20K. A lot of traders end up losing. Makes no sense. Futures get you around the PDT rule. You could, if you're good enough, you could withdraw fund your own account. If you fail, you're out $50. You could get a middle one for $100, 100K funded account. Top one's $150 for a little bit more experienced traders. Get you a 150K funded account, 90% split. You get to keep your first 10K in profit in all of them. They recently reduced the conditions for a payout down to $150 from $200 winning days. So now you need 5 $150 winning days. Reasonable, I think, to take a payout. And yeah, remember, they're an affiliate of mine, sponsor mine. I'm biased, but genuinely useful for traders. Remember, I'm not an investment professional, though. We are kind of flat and choppy today. Listen, guys, as soon as we close this stream, it's going to bring you to our FOMC wait page. For our FOMC stream. We'll be live. We're going to be starting it a little bit early. We will be live this afternoon, getting ready for the FOMC. We will be streaming the entire FOMC decision live, as well as the press conference fully live on stream. We'll have thousands and thousands of people here tuning in. I appreciate you guys watching me today. A lot of economic reports showed strength today. But look, but before just my final thoughts here. And again, I'll put the top step link up. But just for my final thoughts here. Okay. Every decade or two, you get a tech revolution. You know, again, people who built carriages didn't like when automobiles came out. And so confirmation bias made them discredit the future of automobiles. When you had internet come out, same thing. People said, oh, you'll never buy things online. That's never going to happen. The confirmation bias, previous industries that might be rendered obsolete. A lot of these guys thought that it would never happen, and they bet against it. They didn't capitalize on these big tech revolutions. And again, the internet boom, if in hindsight, every Mag 7 stock is an internet related company in one way or another. Right now, the most successful companies in the world are now internet related companies. The most recent one, of course, is AI. And I remember streaming prior to this AI boom. I would argue with people about the future of AI. I would tell people AI is the future. And this was 3-4 years ago. And they would tell me it's a buzzword. It's nonsense. It doesn't matter. It's not going to be big. Pretty quickly, freaking crickets. Because AI stocks ran and everything else kind of fell by the wayside. And I think, regardless of whether we get a correction like the dot-com boom, the future of the world is AI. I think that's very clear and very obvious right now. But maybe I'm wrong. I don't think I am. I could be, though. Listen, guys. Y'all be safe. We'll be back later. Again, as soon as we end the stream, it's going to bring you to our wait list for... Again, as soon as we end the stream, it's going to send you to our wait list for the Fomc stream that we're going to be doing this afternoon. Be ready for then. I'll see you guys then. Y'all be good. Have a great day. We'll see you guys in a few hours.